Hey guys, what's up, how's it going? Welcome back for another video on the channel. In today's video, I'm going to be giving you guys an update of my entire Canadian-based stock portfolio with Wealthsimple Trade. Now, we're going to cover lots in today's video, and I know I haven't done a video on the channel for about a month or so, so we're going to be doing a deep dive in today's video. I'll give you guys an update on all the stocks I hold. I'll show you guys our dividend income, and I'll show you guys what stocks I am buying in today's video. And like usual, guys, this channel and these videos are very beginner focused, so if you guys are just getting started, this is going to be perfect for you. And if you guys do enjoy the video, please do me a big favor, smash the like button, and remember to subscribe to the channel. The first thing we're going to do here really quickly is I'll give you guys an update on our stock portfolio. So let's see how the markets have been doing, and let's see how our stocks have been performing over the past month or so. Alright, so we're going to do a quick little portfolio update. That's how we're going to start off this video here really quickly here. I'll go over the different accounts we have, and I'll give you guys an update on how they've been performing over the past, I don't know, it's been about a month or so since I published a video on this channel, at least a couple weeks. So a lot has happened over the past little while. So here's the overall account. Here's my account on Wealthsimple Trade. We have about $121,000 Canadian. So if you watched my previous video, we did see a bit of a jump in the markets, actually quite a bit of a jump, and we'll cover that in today's video. We're going to do a little bit of an overview here, but here's the different accounts I have here. So we have the non-registered account, which is a small account here. We have the RRSP, which has been my main focus as of late. And then we have the TFSA, which is the big account that we've kind of really worked on building. The other accounts we're going to show after I go through my Wealthsimple Trade account. We'll do an update on my own personal accounts, and then we'll talk about my all of our accounts together using Passive and whatnot, which is the main sponsor of today's video. But we're going to showcase to you guys all that stuff a little bit later on in today's video. But let's go over the TFSA really quickly here. So here's the TFSA. The 1-day return for the TFSA is sitting about 0%, so a slight little bump up in today's market, and I think most of that's coming from the Canadian market. The 1-week return for the TFSA is up 3%. So once again, this is a portfolio that is highly focused on the bigger ETFs like the S&P 500. We have about 50% of the holding in here. It's about $60,000 in the Vanguard S&P 500. Big fan of the ETF. That's where most of my US stocks come from. And then we have most of the rest of the portfolio is Canadian dividend stocks. And then we have some income stocks and some other things too, and some dividend growth stocks as well. But mostly American stocks with a little bit of Canadian dividend stocks sprinkled in there. So 1-week return up 3%. So nice little jump in the markets overall. 1 month return 5%, so that's about $6,000 over the past month. Lots of recovery there. 3-month return is up 4%, 1 year is 10%, and then all time inside the TFSA is going to be 19%, and this includes growth, dividends, everything. This is the total return of the TFSA since we first started investing, and that's about 19%, so we've seen some nice little bit of growth there. The next account we're going to talk about is going to be the RRSP. Now, I haven't put any money inside this account today, but we are going to be putting about $100 in here, and I'll be spreading this out across some of the stocks I hold here. So the RRSP has been doing pretty good, mostly because a lot of our Canadian stocks have bounced off this month. We've seen a nice little growth here. So here's where we started the RRSP in July, and ever since July, we've just seen some of these stocks kind of take off a little bit. So that's why we have a nice little 7% return. But of course, because it's such a small dollar amount of about $1,000 or so, it's only $65. But hey, you know what? It's looking good already. Here's the stocks inside the RRSP. So the ones we're going to be focusing on today, I'll show you guys later on in today's video. But these are much more dividend growth, long-term stocks, very much focused on growth here. So right, we have Alimentation Couche-Tard, which has been our best performing stock. We have CNQ, which is a dividend stock. CNR, which is a dividend growth stock. Dollarama, which is a growth stock with a little bit of dividend. And then TD Bank, which is kind of like a mix of the two. So we'll look at those stocks and show you guys what stocks I'm buying in today's video later on. But otherwise, that's my portfolios really quickly here. Let's jump inside Passive, and I'll show you guys a quick little overview of how our entire portfolio has been forming together. Alright, so let's do a quick little deep dive inside of our portfolio using one of my favorite tools called Passive. Now, Passive is sponsoring today's video, so if you guys want to sign up, and if you guys see this tool and you guys see me using it, you want to check it out, there is a free version as well as a paid version, but you guys definitely check out the link in the description of this video. You guys can sign up for Passive and get going. So it's a super cool tool that I use to basically manage all of our different portfolios that we have here all in one place. We can see here that I do have multiple portfolios, especially as my money has been growing over the years. You know, in the beginning, it's pretty simple. You might have one account and it's pretty simple to do things, but especially when you have like a partner and stuff and you start to manage these different accounts, it does add a lot of complexity. And if you want to do different things within the accounts, it can get a little tricky. So on here, I have my own personal account. We have my TFSA, my fiance's TFSA, and now my new RRSP, which I've been building out recently inside these videos. So up here we can see our contributions. So in October we hit $700 in contributions inside of our account. September was about $800, so October was pretty close to the same. November we've hit 250 right now, not including today's deposit. So once I put in today's deposit, that'll jump up to be about 300. I think I'm going to put about $100 or so inside my RSB, so that'll go up to $350. Our total holdings are $146,000, and once again we can see a nice little jump up here in the past couple of weeks or so, actually about a week or two inside the market here, nice little jump up there. So this is the different portfolios we have. Let's do a quick little dive and I'll show you guys the differences between them. I updated my personal account already. I did my TFSA, I did my RRSP. Let's take a peek at my fiance's TFSA. So I'm going to click this here, and the nice thing about passive is it lets us kind of like set these portfolios up, and then we can set it and forget it. So she has about $91 in cash. This would be her dividends, which we haven't gotten around to investing yet. So I linked it up to passive. I set up my allocations here, and now what passive is telling me whenever money goes inside the account, it basically tells her what stocks to buy. So I use this to basically look at it and be like, okay, you know what, with my allocations and my percentages I wanted for VDY, with this $91 I got deposit inside my portfolio, I can buy 2 shares, and there we go. Simple as that. And it basically tries to adjust these targets, so we can see I could buy VDY or I could buy a little bit of VFV, and that's probably what I'll do. I'll put the money in VDY, and if there's anything extra left over, I'll just throw it in VFV. Just a simple way to set up your portfolios and not have to do like constantly have to calculate things and do different things. So I'm a huge fan of it. And here's her account. So she's very similar to mine, you know, big, a lot into US growth, and then a little bit of Canadian dividend stocks, and then some small holdings in passive income, a little bit of holdings in passive income just to kind of balance things out. And the other cool thing I really like about passive is the reporting feature. So we can see some cool things about our portfolio over the past little while here. So let's look at the year-to-date returns. We'll kind of see how our portfolios together have been doing, and basically compounding, growing together. So I got everything selected here. We could select individual ones. I'm going to select all, and we're going to hit apply so that we can see all the data of all of our accounts together. I also really like the reporting tab because it can be really tricky to find different tools that allow you to report different portfolios from different sources and whatnot. But the nice thing about passive is they do have different providers, lots of different brokerages, so you can kind of link them if you have them from different places. Here's our portfolio, and we can see the year-to-date earnings and reportings of all of our accounts together like I mentioned here. So here's the different contributions. We can see the contributions versus withdrawals inside of a portfolio. So we've had some good months, some bad months, some in-between months, you know, but it balances out at the end, and we can see our monthly average is about $1,000 or so a month, which is kind of what we're shooting for, about $500 each inside of our portfolios. But of course, depending on how things are going, those contributions would go up and down. Like the past month or so, I haven't done a lot in terms of work. I've been taking some time off. So you're going to have some months where you're going to have a little bit more contributions more than others. Like at the start of the year, we did really, really well. And then going towards the end of the year, we did take some time off. We kind of, you know, have done, you know, we had some things we had to deal with and stuff like that. So our monthly average did go down a little bit, but at the end of the day, you know, you do the work up front, you know, those dividends compound and grow, it does add up. We have 11-month contribution streak, 100%. So every single month we try to contribute at least something inside of our portfolios. Net change is $27,000 in terms of total growth inside the portfolio. Rate of return is about 13%, just under 13%. And this is going to be dividends and everything included. So that's growth plus dividends. So portfolios are doing pretty good, all things considered. Investment growth, that's about $16,000. So this investment growth is basically how much our investments have grown. Without including, it says this number excludes contributions and withdrawals, but includes dividends. So this is just your investment growing by itself. So it's about $17,000. So it's been a pretty good year for us, all things considered, even though a lot of people were talking about how 2023 was supposed to be a horrible year and stuff like that. But it kind of really depends on the markets. But even all things considered, it really hasn't been a bad year, as you guys can see here. Our average monthly dividends is about $445, so about $450 or so per month. This is the dividends by month here. We can see the different tickers here and the dividends. You know, obviously on the quarters, every single quarter we get like these big dividend payments here, but that's because of our big ETFs. But on average, we're hitting about, I would say about like, you know, that $445, but about $300 or so, almost 350-ish per regular month, and then every quarterly month we have about $650 to $700. So those have been pretty solid for us, and we've been pretty happy with that. Here's the dividends coming from the different tickers here. So I don't know if you guys can see this here, but it shows you basically the different dollar amounts. So VDY is our biggest dividend payer, HYLD, VFE, and then so forth. Obviously, some stocks with bigger holdings are going to pay out more dividends. Like VFE is not a big dividend fund, but because it's about 50% of our portfolio, it's going to get a lot of dividends. So just kind of keep that in mind. And the total dividend income is about, I don't know if you guys can see this, my webcam's blocking it, but $4,705. So about just under $5,000 for this month. And a cool thing we can actually look at is, let's go all time. And if we scroll down here, we can actually see the dividend history by year. So, we like dividends on this channel. I like to track dividends because dividends are something you can kind of predict, and it's something you can grow. Like, your portfolio is going to go up and down as time goes on. Hopefully it's going to go up if you're doing things in a good way, but over time it will go up. But one thing you can track to do, especially during these up and down markets, is the dividends. You can see how your distributions have been growing, and that's basically the cash that is paid to you. So as that grows over time, you can feel good about your dividends growing, right? So in 2020, when we first started investing, we made $152 in dividends. Not a lot, right? In 2021, we made $1,371. In 2022, we made $3,239, and then in January of 2023, we're not even done the year yet, we have $4,705 in dividends. So once again, we can see things growing regardless of whatever the market is doing, and it's good to see that. So that's one of the big reasons why I like dividends, but I also like dividends for the flexibility of the income coming in on a regular basis. But anyways, guys, that's passive. This is a tool I like to use. I think it's a great tool. Once again, if you guys want to sign up, there's a link in the description of today's video. So at this point in time in the video, I'm going to do a quick little update on what stocks I'm going to be buying today inside the RRSP. So most of the time these days, I'm buying stocks inside my fiance's TFSA, and any kind of spare cash I have, I basically put inside my RRSP, and then I have my employer stock purchase plan, which also puts some money into there as well. So I haven't been tracking a lot of my investments, and on Blossom, as you guys know, I had to relink my account. I didn't realize my account wasn't linked for like about a month or so a lot of my updates don't go on there, and because my fiance's portfolio isn't linked on there yet, a lot of you guys aren't seeing my buys. So just refer to these videos, but more or less I'm just buying the same stocks as usual. Nothing crazy is going on there. But if you scroll down here, I have about $100 I'm going to put inside my RRSP today, so we could buy any one of these stocks. Once again, my best performer so far from the dividend growth stock is going to be Alimentation Couche-Tard, so I could put some money into there, but I already have about $200 or so I'm not too sure if I'm going to bring that up. The big ones I could buy is TD. TD has recovered a little bit over the past, let's look at the past month or so. It is up 5% in the past month, so nice little jump up, but I still think the banks are still always a good time to buy them, and it is one of the smaller holdings inside my portfolio. So maybe what I'll do is I'll put like $50 into CNQ and TD today, and that'll probably be the stocks I'm going to be buying in today's video, and just kind of keep it simple and not stress too much about things. And before we end today's video, I'll do a quick little update on the total returns of all of our stocks inside all of our accounts using Wealthica. So this is Wealthica. This shows all of our holdings inside all of our portfolios. So this is all my accounts, all my fiance's accounts combined together. You'll see that there's a little bit more of a total value than there was in passive, and that's because I do have my employer ESSOP on here as well. So there's a little bit of money, it's about $16,000 in a Loblaw stock in there as well. So something to just kind of keep in mind. But here's the total return of all of our stocks. The tickers are on the left side. I do like to update this so you guys can see the real total return of my individual stocks, because there's not a lot of tools that do this. But Wealthica is a great tool to see your total return, like the real total return of the stocks inside your portfolio. So that's something that I do like to use the tool for. So here on the left side, we have our income right here, and in terms of a dollar amount. And then here we have the all-time gain / loss in a dollar amount. And then we have the percentage version. And on the right side, we have gains in terms of stock appreciation, and that in terms of a percentage. So for example, with VFV, we have a stock growth of 13%, which is $8,000. We have income growth of $1,700. And then if we add the two together, we get a total return of $9,000 or about $10,000 with 15%. So this left side here with the percentage point is going to be the dividends added to the stock growth here. So we see it's always going to be a bit of an increase, and the more dividends the stock pays, the more difference that's going to be, right? So with VDY, it has a much higher dividend yield than VFE. I think it's about 4 to 5% right now. We can see in terms of stock growth, it's about 4.35%. And then with dividends, it's a 15% return. So don't sleep on the dividends, but of course it depends on the stock, depends on how the stock is done, and it depends on when you bought into the stock. So there's a lot of different factors here that kind of like, can change the numbers a little bit. So just be aware of that. Make sure you look at a stock's history, look at the stock's price, look at the dividend yield, the dividend growth, because it'll give you a more accurate picture, because everybody buys stocks at different points and stuff like that. So don't just go by these numbers. Make sure you do your research, because sometimes it can be a little misleading depending on when a person bought in and whatnot. Nonetheless, it is the actual return of my stocks. So those are the two ETFs. Down here we have HYLD down negative 6% in terms of growth, but with its nice dividend yield, we're up 5%. So that's how the covered call ETFs work. TD Bank has recovered quite a bit here. I bought a lot of shares when the price was low. So once again, 6% in terms of stock growth. Doesn't look very impressive, but you add on that dividend, goes up to 16%. Couche-Tard is very much a growth-focused stock, so we see 47, almost 48% total return from Couche-Tard. I think this is the highest this stock has ever been for me. I think 50% would be pretty sweet to get. But once again, it's not a ton of money. It's a little bit of cash, about $3,000. I should have bought more, but again, I'm focused on ETFs. I'm focused on other stocks, so it's just the way things go. But Couche-Tard has been a pretty good performer for me. CNR coming up next, doing okay. TELUS has recovered quite a bit. I didn't buy too much of TELUS, but I've been steadily buying into it. So looks like it's recovered quite a bit, and it's got a nice healthy dividend yield too. So we're almost at zero for that. And scrolling down here, we have big old fat AQN down negative 38%. So it did look like AQN has climbed up a little bit, but I'm not too sure what I'm going to do with this one. I'm probably just going to sell it at the start or towards the end of the year. And just put that money into something a little bit more better. I don't like to sell stocks when they're in the red or in the negative, but this one I've kind of held on to, and it just doesn't seem like it's going anywhere. It might bounce back, it might rebound, and I think it probably will over time. But the big question is would it be smarter just to put it into ETFs? Would it be smarter to put it into a better stock like Couche-Tard? Like, there's a lot of questions here, and I just don't see it really doing. It's just kind of just sitting there, not really doing much. So I might take it out. Whether it was the best performing move or not, I don't really care. I just want to put into something that's gonna, kind of perform better and do better and whatnot. And I don't have to have it on here. Like, it kind of just sucks to see that negative 38% and it's not doing nothing. It's obviously a small amount of money, but $3,000, I could take this and spread this into my individual stocks. I could stick it in my ETFs. I don't know. So we'll think about that. That's probably going to happen towards the end of the year. Because towards the end of the year, I am going to be selling some stocks in my personal account to get that ready to move into the TFSA for next year. So that's something that's going to happen as well. Going down here, we have Loblaw. So Loblaw is my ESSOP that I have. This one, for some reason, doesn't link correctly with Wealthica. It's because of the way the shares are bought and stuff like that and reported. But this stock is up about 30% if we add in my employer match. So if you guys have an employee match of any kind with a great company, definitely do it, because this stock, like I said, I got like a 31% return with it just after a year. So it does well, especially if you have a decent match. Going down here, we have FTN, which is the financial split. This is a covered call. I've been kind of messing around with these, buying them as they've dipped down a lot. They did recover quite a bit. We did see a lot of recovery, but we've already got like a 7% growth on dividend, which is kind of funny because we've just recently started buying this, I think, earlier this year. So I wouldn't go crazy with these ones, and it's a pretty small holding. We've just kind of been messing around with it, using it as income generation inside our portfolio, but it's such a small amount. We'll kind of see how things go. I'm kind of just having some fun with it. Fortis is up 10%, 11%, so that's doing pretty good. XCI has recovered quite a bit, sitting at about almost zero, so it's almost in the green. POW has bounced up quite a bit to 5%. C&Q doing pretty good as well, up 23%. But again, a lot of these ones at the bottom are just very small holdings, right? Like, so I wouldn't put too much weight into them because it's such a small holding, right? It's easy to look at a small holding and be like, oh my God, it's up like 20% or whatever it is, but it's such a small amount. Obviously, the bigger ones that you buy into on a regular basis, these are the ones that you want to pay attention to. But nonetheless, I've been growing them as time goes on, and we can see some of these individual ones doing pretty good. But that's just a quick little overview of the portfolio. So hope you guys enjoy it. Hope you guys like it. Once again, if you guys have any questions or anything like that, feel free to let me know in the comment section. And if you guys want to see my portfolio, there is a link to Blossom Social. You can kind of do a deep dive into there. You can see all my stocks and whatnot if you guys want to take a more slower pace to that. But anyways, guys, take care. Hope you guys enjoyed the video, and I'll see you guys later.